Hi, this is Zak Mir with the Bulletin Board Heroes here on Share Talk for Sunday, the 14th of March. Starting off with 88 Energy, where there was that explosive move on Friday. Technically speaking, we had the evidence for it, so if you spotted the gap through the 50-day moving average early doors, you could have been in on the picture there. Current situation is that we've got the old January resistance at 0.66, and while we're above that on an end-of-day close basis, we've got a best-case scenario target here, technical target at the July resistance line projection, promising a peak at 1.2 pence, and that could be as soon as the end of this month if the momentum is maintained. On to Argo Blockchain, which is probably going to be in focus tomorrow as people get all excited about the new record high on Bitcoin. Been looking for a target here as high as £4.50, £5, and I suppose won't be alone in that, in the sense that the stock has many ardent fans. But it's good to see, and has been good to see the last 3-4 days, shares finding a support at the floor of that rising trend channel, and also breaking that early March resistance line around £2.35. While we're above that, looking for the best case scenario target, £4.50, as soon as the end of next month. Good to see that Cellular Goods has managed to find its feet after falling for several days after coming to market. Current situation is visible on the 5-minute chart. Obviously, there's not much data to look at the moment. And here we've got, so as we had the turnaround there on Wednesday, breaking, I suppose, back above 10-11 pence, which did the trick. Current situation, which is obviously not that great given we have only a 5-minute chart, but top of rising trend channel there from early last week is currently pointing to 17 pence, while we hold above the 12 pence area, which was neckline resistance. So above 12, looking for 17, which obviously would be quite a result for the bulls. Moving along to a stock which is rather less frantic. It comes in the form of Immedia. Here you can see that we've had this rising trend channel in place for what seems like months, and a situation which has been developing for months as well. Everything here really hinging on breaking 40 pence, and in a way you could actually just wait for that to be broken and then target the shares and their top of 1-year trend channel target as high as 65 pence. Given how many failures we've had there, so 3 or 4 at 40 pence, then that would be a significant break. Stop loss, as far as people are concerned, if they're already in the situation here, would be back below 34 pence. Ideally, there's no break back below that now to give away the idea, or to provide the idea, that we're heading higher on Immedia. Stock which is very intriguing indeed at the moment, Open Orphan, and the reason for saying that is just the way that we've been trading sideways for a long time, but trading sideways at the highs around either side of 30 pence. And the other plus points here are the way that we haven't been below the 200-day moving average for nearly a year, which is incredible. Finding support generally at or just below the 50-day moving average, which is rising. In fact, all the near-term moving averages are rising, and also breaking that October resistance line there, which we did last month, around 27 pence, and we found support at 27 pence since then. So it does look as though this is preparing itself, this stock, for a decent push to the upside, something which would be of the nature of the October move that we've seen. So maybe for March to July, something like that, we head up towards 60 pence. Looks very ambitious, but that is the strength of the setup we see at the moment. So let's see what happens. Stock which I was requested during the middle of last week and didn't manage to get around to, so here it is. Pharos Energy. Here we've got, I suppose, a situation not that far off the Open Orphan setup, with this extended support area near the highs, or the highs post-June 2020 highs. The view is that while we're above the broken initial March resistance at 22 pence, and I suppose that's really initial 2021 resistance, we could head as high as the top of the 1-year trend channel up to 50 pence over the next 2 to 3 months. It might even be quicker given the setup that we have had. On to Renold, which I don't look at very often, but the excuse is there today on the break of, on the basis of this bull flag that we've had, almost like a sort of cup and handle. And the view is that while we're above yesterday's floor, around 19.5 pence, which is also the floor of the flag, we could see a move starting towards the top of a rising February 2020 price channel up to 35 pence. That could be seen as soon as the end of next month, but always a solid sign when you see consolidation or a flag well above previous resistance, which in this case we have, even if you go back to the January resistance of last year. So that's support coming in at and above those highs too. On to a stock which is starting to move very well, which I've flagged before, but actually decided to upgrade the target. Skinbiotherapeutics, I think before I was looking for 60 pence, but having a relaxing weekend and thinking about it a bit, it looks as though we can actually head up towards that October resistance line projection, and that's currently promising a target as high as 85 pence. And that could be seen perhaps as soon as the end of May, or even sooner if we get the sort of vertical push that we've had, or the second leg to the vertical push that we had from December going into January, or the end of January. Upside valid while we hold above, at least while we hold above the late January resistance around 43 pence. So above 43 pence, looking for the big target there, 85 pence. And at this stage, only back below the 50-day moving average, currently at 36 pence, really delaying or casting the bull argument into doubt. Couldn't resist looking at SYME Capital, just because it's back and it's being traded freely. We've got I thought the price action on Friday looked quite good in the sense that we managed to bounce off the 50-day moving average, currently at 0.48 pence. In fact, we did that over Thursday as well, so that was impressive. And so the end of week close back above the 50-day line does suggest that the shares are attempting to give not only a retest of December resistance at 0.7, but maybe do a bit more than that. Big picture target here over the next 2 to 3 months, if the company gets its fundamental act together, perhaps, is up to 1.2 pence at the top of a rising one-year trend channel. This stage, I'd only really be disappointed if the shares fell back below the 200-day moving average, starting there at 0.36 pence. But the big win here, or the win here, is that we hold above 0.45 and recent support, pre-suspension and post-suspension support for the shares. On to a stock which has been a bit of a difficult customer as well, Tertiary Minerals. It looks as though things may be finally settling down, though. We had the break of the 0.4 pence level and also that resistance line from back in February last year. Then this week, the big plus point has been the bounce off the 50-day moving average at 0.4, so finding support at old resistance and bouncing off the 50-day line. If you're a fan of the shares, you'd be loyal to them while there's no end-of-day close back below 0.4. Looking initially for February's peak at around the 0.65 level, I think that was, 0.64. And the big picture target here over the next 2 to 3 months as high as 1 to 1.2 pence, obviously retesting February resistance last year. Just a couple of stocks to go now. Look at Union Jack Oil first. It tends to be a problem here that every time the shares are looking a bit bullish, there's a placing from the company, but hopefully that won't happen this time. Here we've got a higher low, a much higher low versus November. And while we're above that extended support area, 28 pence, looking for a retest of January resistance towards 43 pence. Big picture target here would be a retest of August resistance from last year, but I think we'll probably want to see 40 pence held on a weekly close basis at least before getting too excited on Union Jack Oil. But I do like the bullish divergence there. We had a low there around 30 pence for February and a low for March at 28 pence, but the RSI has actually gone up. So bullish divergence could mean that on this occasion we do actually see a surprise move to the upside. First hint of that would be a break of Friday's high at 36 pence on an end of day close basis. Finishing off with the rather more obscure company to follow, Universe Group. Here we've had a simple break of a resistance line there from August and the 50-day moving average at 3.48 pence. Above that, we're looking to retest post-2020 resistance at 6.5 pence as soon as the end of May. That's it from me today. More updates tomorrow.